Good morning, welcome to IG's early morning call. It's Friday, 25th of August. Let's take a look at the headlines as we expect what could be a little bit of a slightly weaker start to the European equity markets this morning. We're seeing the dollar rising to an 11-week high, and this is putting a lot of pressure on global markets generally. We've got Jerome Powell speaking at the Jackson Hole symposium later on today, which could well be the point at which we will either see things turn around, depending on whether or not we see a dovish speech, or perhaps maybe more of the same if he plays the hawk. As we see that speech unfold at 3 o'clock this afternoon, UK time. As I said, equity markets on the way down, broadly speaking. Nikkei is in amongst the leading losses at the moment on the APAC region. And all this comes as UK consumer confidence jumps by the widest margin since April. People thinking that with the increase in wages that we've seen recently, they're feeling a little bit better off. But that itself has implications for interest rates as we go out. Lower consumer price inflation, generally speaking, has been lifting the consumer mood. More on that in just a minute. Let's take a look at what's happening on the markets. Volatility springing back into some sort of life yesterday. It's really still not seeing the sort of uplift we need to see in order to make sure that we can see some good active trading opportunities. Although there are some around, and mostly coming in the foreign exchange markets. I'll take a look at the dollar in just a minute, which is where much of the activity is. But this is a London FTSE 100 single-day candles, and excuse me, you can see the shape of yesterday's candle, that big spring up at one point, and then the pullback. And we're not too far away from where we closed out yesterday's session. But I think, broadly speaking, we are expecting a slightly lower start to the trading day. Likewise, the German market's ticking lower. German growth has just come through, confirming for the second quarter it was flat. So that technically means it's out of recession. But we have to say the German economy is in all sorts of trouble. But that's reflected in the price action this morning. And we're expecting a lower start as well in France, 71.92 below the point at which we closed out yesterday's cash session. And like many of these markets, it's finding they're going tough, broadly speaking. Let's take a look at what's been happening overnight in the Asia-Pacific markets. As I said, one of the big moves that we've seen has been on the Nikkei 225, down 2% at the close of today's session. But we're also down across the Chinese markets, the Hang Seng Stock Index down 1.25%. That market still continuing to trade, with the market still got a little bit of a distance to go before the end of the trading day today. And losses as well across the Australian markets. I want to show you a chart for that Nikkei, because that's the one where we've seen the most activity. But in the broad scheme of things, it's not quite as low as we have seen in the last couple of days or so. But this loss overall, 31,600, and we're ticking lower as we speak. Wall Street closed yesterday, coming as it did, excuse me, with another rise in yields. US mortgage rates jumping to 7.23%. According to the Mortgage Association in the States. This is the highest since May 2001. And this had a depressive effect across Wall Street in yesterday's session. But as I said, the swing point likely to come later on today. Growth stocks taking it on the chin, down 1.8% for the NASDAQ. That was that loss we saw yesterday. And you can see building on that, albeit fractionally at the moment, at 14,769. So at the moment, short position still trading in the money. But as we've been saying, this is still just a retracement of the moves that we've seen since the lows we had back in October last year to the highs we had on the 19th of July. Forgive the broken record message, but it is exactly that. And we've said this pretty much every day on the early morning call. I'd want to see a candle close below 14,235 before really then starting to build up a war chest to go short on this sort of market. That being said, we had the MACD pointing lower. I think people are looking for opportunities to sell this market, but expect some choppiness as we go into that speech later on today at Jackson Hole. I'll take a look at that and what to expect in just a moment. This is the Dow, yesterday closing below this rising line of support, and that is partially significant technically. MACD pointing lower there as well, so technically we are expecting a further drop on this market from where we are. I want to draw a fib on here from that low that we had back in the market back on the 10th of July. Fibonacci there showing us that we're actually on the 76.4% retracement. Again, technically significant because that means there is this line of support of 34,099, and we're just a little bit above that at the moment. You get a candle close below that line, and then I'd feel safer, happier, and more expectant taking the trade on down to the total retracement down to 33,600, which was the low we had back on the 10th of July. Look, we'll pick up on these markets in Beat the Street at 1:30 today. Angela and I will be with you, taking you through some of the headlines and some of the effects that could well steer the trade on the session today. But I think really it is nonetheless, we can predict fairly safely. It's all about the banking symposium getting underway, or it got underway yesterday technically, but we got the keynote speech today at 3 o'clock this afternoon. We hear from Christine Lagarde at noon today, and then at 3 o'clock, Jerome Powell gets up. Ahead of all that, we've just heard US mortgage rates jumping to 7.23%, highest since May 2001. Is this a symptom of the belief that we're going to see the Fed with a relatively hawkish tone? I think if you look at what's happening on the foreign exchange markets, this is the dollar basket. It's on an absolute rip at the moment. Yesterday, a storming gain on this market, taking us up to levels not seen since the beginning of June. And we're building on that position at the moment at 103.86 today. Price target, if you're long on this, is 104.26. But the speed and the energy with which we're seeing this rise, you can see that the market's expectant that we will at least see that line there and even possibly broken, which would then take us back to levels not seen since the 15th of March. As I said, we will find out a little bit more today, although to be honest, where rates end the year will depend wholly on the economic data. And who knows where that will go. And I think that's going to be the message we'll get from Jerome Powell today, is that whilst we could possibly be at or near the top on the rate cycle, we just don't know because we don't have enough information. It's quite clear from the experience on the German DAX, which we'll take a look at in just a minute, or rather the German economy, that with flat growth, with rising interest rates, it is hitting some of these economies really badly. And I think whilst the greenback here is poised to record its sixth straight week of gains, rising overnight, taking the dollar basket to the 11-week high, on the opposite side to this is what's happening in the Eurozone. I want to show you this just as ahead of the details of the German stats we've got out just a short while ago. You can see we're resting on the 76.4% retracement here on this fib from the lows that we had back on the 31st of May. The swing high took us all the way up to 112.75, which itself was the highest trade we saw the euro at against that weaker US dollar since the 24th of February last year. But this pullback, as I say, whilst resting at this 76.4% retracement, significantly, I think, technically at least, is that we're below the 200-day moving average, which itself gives us possibly more confidence that we could well see a total retracement all the way down to 106.35. That would be euro weakness at the hands of a stronger dollar. And I think for that to happen, we do need to see a hawkish message coming through from Jerome Powell later on today. Let's take a look at another area of the market before we take a look at the German side of the economy. I want to take a look at what's happening here in the UK, because we've seen some good GfK consumer confidence out overnight, rising more than expected in the month of August, the index recording its biggest gain since April. Evidence suggests that the cost of living is finally beginning to ease, with some caveats. Let's take a look at what we got from GfK this morning. It's still negative, though, and the easing of the situation is all relative, rising to a negative 25, 5 points better than the previous month. Economists anticipating a gain of only 1 point to a negative 29. British consumers' mood perking up as lower inflation made individuals less downbeat, with the consumer price index now at 6.8%. Wage growth is now close to matching inflation for the first time in nearly 2 years. But that itself has all sorts of problems for the Bank of England, with wage growth soaring as indeed it is. It means that the Bank of England is now potentially poised at least to keep where we are, or possibly maybe to raise rates further. But look at this, what's happening here is that we got weakness for sterling coming out of this number out overnight. I think possibly the interpretation for that, well, there's twofold. First of all, is we've got a stronger dollar, which is why we've got the sterling down as we have. But sterling is also weak as well against the euro. And I think part of this is possibly that if the Bank of England does keep on raising interest rates, the UK will go into recession. I think that's an inevitability with the direction of travel. I want to show you this as well. This is a head and shoulders pattern here, and I've already drawn the head away from the neckline. Neckline is because of these two low points we had here. I've drawn that red dotted line measuring the distance and projected that down here. This would give a projection of the lows that we had back on the 15th of March at the 120.50 level, which would be the price target if you're short on this. If you are short, stop goes above the top of yesterday's candle, around about the 127 level. That's quite a long way away. That's 2 cents away from where we are, but that shows you the distance and the speed of the move that we saw yesterday with that big drop of sterling against the US dollar. But the fact we're now trading below the neckline, we had a candle close below the neckline yesterday, and we're picking up on the downside as well today. There is some sort of confidence that the short trade will continue in this sort of direction. Again, subject to what Jerome Powell has to say this afternoon. Now, if you do take a position where we are at the moment with the stop loss around about the 127.50 level, what you would want to do is if you saw a pickup on the downside for this, you then want to bring a stop loss in to lock in some of the profits as we go on further on down. And I'll be covering this in the days, weeks ahead on the early morning call just to check in to see how that trade is going. Below where we are is the 200-day moving average, which is kicks in at 124 at the moment. And that could be an area where we might well see some sort of support for sterling. Sterling against the euro, slightly different sort of trade, but we have seen 2 days, 3 days now of declines for sterling against the euro, despite that slightly stronger than expected number coming through this morning for the figures around what's happening in consumer confidence. Now, as promised, let's get up to speed with what's happening in Germany, because there's been some German data out this morning. Final estimates of gross domestic product in the second quarter, unchanged, flat. Quarter on quarter, down 0.2% on an annualized basis. At 9 o'clock this morning, get the IFO Business Climate forecast to decline for the fourth straight month to 86.7 from 87.3 in July. We will consider and continue to monitor what's happening with the euro, as we've just been explaining. It's gone down recently at the strength, in the face of the strength of the US dollar. Now, let's take a look at what's happening corporate-wise. Nothing out here in the UK of anything particular to speak about that I want to talk about this morning, but I do want to focus in on what happened late last night for Gap. It's not an all-session stock on the IG, which means that there was no opportunity to trade this. But let me tell you, the end result of what we saw here, where we saw a beat on earnings, but revenue coming in just shy of expectations, the stock was down 2%. As top and bottom line show, Gap has been battling declining sales and even warned it was losing market share to rivals like Shine, Amazon and TJ Maxx. The group had no choice but to close underperforming Gap and Banana Republic stores to save on costs. I think Gap's had to part with something like around about 2,000 jobs to shield its margins. Now, I want to show you what happened in yesterday's main trade. And on from the close at 9.53, we saw a further 2% knock on from the share close. Let me just draw that in for you just to show you where 2% looks like. And that would then, at the open today, take us down to levels not seen since the 25th of July. So that will be the move that we're expecting at the start there today because of what we saw yesterday on from the close of Gap and the subsequent post-market trade. Let me just bring up a chart of what's happening in other areas of the market. US crudes of interest, as indeed is Brent, up for a second day in a row today. Yesterday, the gains were seen on a report of a drop in gas oil stocks in Europe, and we've seen a continuation of the direction of travel, but it is only a small move. Just want to quickly remind you, last Friday, we saw the Baker Hughes total rig count declining further by 12, taking the total rig count down to 642, at the lowest count since mid-February 2022. The number of active oil rigs falling by 5 to 520. Now, this would normally, in normal circumstances, expect a rise in the price of crude. And indeed, that is what we got last week. But the concerns about the outlook for what's happening in China with lack of demand, I think, really continuing to dog the markets. That was the candle up that we saw last week when we saw that Baker Hughes rig count come through. But since then, markets have fallen away. Staying on the chart, just want to briefly update you on what's been happening with spot gold. Not too far away from the recent highs. Yesterday was a long-legged doji candle. This indicates that the markets are in an indecisive mood, but we are retaining trade above the 200-day moving average, which possibly significantly means that there's an opportunity here possibly to buy. We've got the MACD pointing up, indicating momentum is picking up on the upside. But I think much of what's happening is really dollar-related. And whilst gold, for my view on this, wants to go higher, it is prevented from doing so in dollar terms because of the moves on the foreign exchange markets. Remember, if you buy gold in local currencies, you're including a currency risk in all this. And gold has gone up over the last few days in sterling terms because of the way in which the foreign exchange markets have traded. So the fact that gold is not going up on dollar terms is all a function of the performance of the US dollar. And that, I think, is the message I want to leave with you going into the session today. It is really all about what's happening with the dollar. It is all about what's going to happen at 3 o'clock this afternoon UK time, or just shortly after, when Jerome Powell gets up to speak at Jackson Hole, because that is going to be the pivot point for today's trade. We're back at 10:30 with Charting the Markets. Hope you can join us there for that. And we'll see how things trade up until that speech this afternoon. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.